Hey guys, this is going to be another look at ES starting on the log scale weekly chart. And so I've been doing some more thinking about these fifth wave extensions and I might have reached a new conclusion. So let's talk about this again. So, quick recap. Back in 87, this is a big extended fifth wave, right? One, two, three, four, five. Traded off of this anchor internal to that wave and it traded once highs to highs to a 618 target and twice highs to highs to a 618 target. In the subsequent crash correction, retraced 100% of this extended fifth wave. So going up into the 2000 top, we were trading extensions off of this anchor. Same anchor to new highs. Once to and through a 618 target, twice to a 618 target, a third time to a 618 target. So, I'm not sure how to label this exactly, but this is a big extended fifth wave. And in the ensuing correction, 2009 crash, this crash came back to the beginning of this extended fifth wave. The anchor was right here, and so it was about 100% retracement of this extended fifth wave. So that's what happens to extended fifth waves. They get retraced completely. And so, over here in this big bull market channel we've been in, sort of the working assumption is that, we're somewhere in the cycle like here or here, meaning we've just started trading the fifth wave extension and we're going to punch out of the channel. This is the first time now, and we're going to do it again and again. And, if we just measure in percentage terms, how big was that gain? This fifth wave extension started here, and it was about a 90% gain to the market. And then this one started here, and that was about 130% gain. So just huge moves, which means that, if this were going to be an anchor for a series of fifth wave extensions, that 100% gain would put us up around 6,800. So just huge moves. But I'm sort of rethinking that, and let me pull up some images to show you. So first off is this one. This is from bar charts where I get a little more data, and they also have logs. This is a weekly log chart, and they also have log scale fib levels, which Thinkorswim does not, which is just utter garbage. And so since this high in 1980, SPX has been going up in highs to highs extensions. Right off of this high, the 87 crash was a perfect 50% retracement highs to highs. The 2009 crash was a 50% retracement of this highs to highs. And the 2020 crash was a 50% retracement of this highs to highs. And so the bullish case is very simple. Bulls think that this is the start of a new cycle and we're not near the end of anything, and therefore where we are now is somewhere like here or maybe here. And yeah, we may have a correction, but it's just going to be a wave one, and that this is going to go on for a decade or more. That's sort of the bull case, although I think that has been changed completely by potential Fed tightening, which tends to mark the ends of cycles. So this is what's been trading, and the base bearish case I was working with looks something like this. Right, fourth waves trade as extensions off the top or bottom of the previous impulse wave. So 87 was a fourth wave into an extension, 2009 was a fourth wave into an extension, and 2020 was a fourth wave into an extension. And so I was viewing this as a fifth wave. in wondering whether the weekly extensions we've been in were the fifth wave extensions were all we're going to get, or is this fifth wave going to extend by trading maybe highs to highs and go up even more, another 90 or 100%. And so what I've realized, let me grab another photo, is that this 2000 highs to highs extension has already traded twice. This, when was this? The 2016 correction was a 50% retracement, and this was a 50% retracement. And so if you want to label that, it looks like this. Right, so 1 2 1 2 3 4 3 4 5. And so what I'm rethinking now is that, you know, this entire structure is a fifth wave extension. And the highs to highs extension has already traded twice. And we poked above the weekly channel here and here, which means we're outside of the channel not for the first time, like I was sort of thinking, but actually the third time. Which means that it is possible to view this whole thing as a fifth wave extension that's closer to the end than to the beginning. And when you throw Fed tightening into the mix, it looks very bearish. And remember that if this whole thing is a fifth wave extension of this entire structure, right? This fifth wave was internal to this structure, and this fifth wave was internal to this structure. They were completely retraced. So if this entire thing is a fifth wave, I mean, I it sounds crazy when Elliott wave people make mega predictions that are going back to 600 or whatever, but that's sort of the thought process behind it. Um, and so this is causing me to, instead of looking for a fifth wave, which I mean may still happen, we may still get a ginormous fifth wave extension. I'm simply pointing out that this highs to highs extension has already traded twice, which is what fifth wave extensions do. And so instead of looking for extensions to start, it's possible that it's already happened. Let me look at the images. Is that... So, and because this has already traded twice, the next in a potential series, I mean, depending on how we get there, 2700 more or less must be considered a valid potential support level. So if we have some sort of scary looking crash slash correction here, just keep that level in mind. Is that everything I wanted to talk about here? I think so. So if we go back to Thinkorswim, so again, we poked above the channel, and we're above the channel for the third time, technically, and not the first time, which puts everything in a different perspective. Right? Maybe a fifth wave extension at this large degree of trend is completing. And I think that's all I want to say about that. And so, I mean, the question now is, this channel is broken. The series of extensions off of this anchor is broken. We're outside of the channel. So if this is a correction, we're correcting a wave at a larger degree of trend than anything in the channel. And so, was this a fifth wave? I mean, you can argue that there was a 1 up, a 2 down, a 3 up, a 4 down, and a 5 up, and that this has all been fifth wave extensions already in this channel. I mean, or you could argue that this was a 1 up here. This is a 2 down, and this has been a strong trending third wave going up in extensions. And so if that's true, then a fourth wave could correct down to the top, an extension off the top of the wave 1, right? And this is the support level we would be looking for, a correction internal to this structure, which is different from the 2018 highs to highs. The 618 of this one is close to the 50 of that one, which gives you a zone around 4,000, which I think is almost where the 200 day is at this point. So, I am ambiguous now on what is happening, but it's incredibly difficult to say something is a top or not. But it is possible that this is a top. And so if we go to let's go to the 1 hour chart. So if we just look at this very simply, if we draw a regression channel on here from this high to this low, we've been in a very clean channel. I mean, this seems like algorithmic trading to me. Buying anything below the channel, selling everything above it. And we stopped at the end of the week on the median line. So, as far as the intermediate term, as far as this intermediate term trend, here is what I was thinking. It seemed like we had a very clean 1, 2, 3, 4, 5 down into a 2 up, and then we were working on a 1, 2, 3 down, expecting a 4 and a 5. And here's where what should have happened didn't happen. Right? We were looking for an extension off the bottom of that wave 1. And it actually traded. Right, in the overnight session, we got a extension short traded, and there was a confluence of resistance with this line. And then Thursday morning, they broke it, and they penetrated up into this zone, making it impossible for this to be a fourth wave. So the bearish scenario is now even more bearish, because the bear scenario is we are nesting 1s and 2s in a down-sloping channel, just like ZB did a while ago on the 2 hour chart. We had 1s and 2s, and then we had a big third wave flush. So it would be a big 1 down, a 2 up, a 1 down, a 2 up, a 1 down, a 2 up. And then eventually one of these is going to be a third wave. And the destination on the weekly chart is uncertain where we're going to find support. So the bearish scenario, I think, is very bearish. The bullish scenario is some sort of weird series of 3 wave moves. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, and then this is like a 3, 3, 5 down. And we do, on the hourly chart, have a bullish divergence, at least temporarily, right? This last low here was not oversold at all on the 1 hour chart. That is a divergent low. But again, you can't get too bullish until we break out of this channel. And maybe if we have some sort of long from lows that back tests the top of this channel, maybe that might be an entry into some sort of additional wave up. But I guess all I want to say is the bearish scenarios are very bearish indeed. And I think that's all I have time for. Thanks, guys.